Art Collins here. Today, let's just cut to the chase. I'm going to give you a standalone system with a tight stop, some impressive looking numbers, and I maintain that a person could use this with confidence, all for free. Such a deal. All right, we're going to be using 135-minute bars that I've done a lot of research on. That's one of the two drivers that are involved in what I'm going to show you here. Breaking the day session into 135-minute bars. Day session is 405 minutes long from 8:30 a.m. to 3:15 p.m. Central Time. And if you break it into thirds, the first one goes from the 8:30 open until 10:45. The second one goes from 10:45 till 1 o'clock, and the third goes from 1 o'clock till the 3:15 close. So those are equal lengths, and they pretty much get you covers like morning trade, late trade, midday trade. All right, second driver is using the cup cap pattern that I have demonstrated is, if not the most profitable of all indicators, it is the most consistent. 135-minute bars. I like the idea of that, first of all, because anything that is off the beaten path gives you a clear lane rather than one where you're competing with a zillion other traders. That the uniqueness of it is an advantage all by itself. Again, it breaks the day into equal morning, midday, and late session trades. And the bars have yielded multiple profitable systems. So anytime I can claim that, then I would assert that there's something there. Second part of this, cups and caps. It's a concept that has produced biases across markets in all commodity sectors. In fact, just about every individual commodity. When I did my original study on the 2006 book on an overnight version of it, I think there was just one market that was slightly negative. All the rest of them, positive results. It's a concept that has held up literally now for decades. So what is the definition of a cup? And this is true whether you're looking at daily bars or 5-minute, or in this case, going to be 135-minute bars. It's a 3-bar pattern in which the middle or second bar out of the 3 has a low that is lower than the bars surrounding it, before and after. And also a close that is lower than the closes before and after. Definition of a cap. 3-bar pattern. The middle bar has a high that is higher than the highs before and after, and also a close that is higher than the closes of the bars before and after. And here we have a visual representation. This is a cap because the high is in the middle and the close is in the middle. Second bar high and close is the highest. This is a cup here because it has the middle bar has the lowest low and the lowest close. Got another cap there. So as this suggests, we're going to be buyers and sellers off of those. At 10:45 a.m. Central by following a completed cup formation. That is the last 135-minute bar of the previous day. Contained both the lowest low and the lowest close of the last 3 bars. Okay, right now we're looking at 10:45, which is the end of the first third of the day bar. The one before that was the last of the 3 bars of yesterday, and that's the one that had the lowest low and the lowest close. And just the opposite if you want to be short. The last bar of yesterday had a higher high and a higher close than the bar preceding it, and today's first bar. Use a $300 money management stop. Exit at the 3:15 p.m. Central Time. Session close. Okay. So this is the S&P. 10-year study, $13,000 profit, $9,100 worst drawdown, giving you a return on account of 152%. You're never risking more than $300 in a day. This is how it looks in all the other markets. Probably got your best shot. Maybe the mid cap, although you have to be careful of the liquidity of that market. Trades much smaller than the other markets. I would say maybe the NASDAQ is your best bet. $36 a trade before slippage commission, with a worst drawdown under $5,000 and a return on account of 425%. So decent NASDAQ system, possible mid-cap system, and confirmation in the other markets. So your takeaways: cups and caps pattern is a robust time-tested indicator. Its application to 135-minute bars gives you a relatively untraveled lane. Anything you can do that's a little different, still get results. That portends usually good things. Low money management stop and no overnight risks makes this a viable trading system. Happy to announce this is finally out. Beating the financial futures market, the 2020 Almanac, keying off the original 2006 book. And I'm Art Collins. Thank you for joining me.